Hi Ron, it's Stuart. It's Fed night tonight. It's been a baking hot day here in sunny London. It's been to 28 degrees today. It's still beautiful and sunny out there. Very unusual for this time of year in London, but there we go. We've made the most of it, and we will make the most of it as long as it lasts. A bit like the Fed's decision, they're really hamstrung. They're in wait and see mode, but they're going to be waiting and waiting and waiting. I'm in my t-shirt. I'm in the proptrade.com t-shirt because it's so hot in here. I've got a little fan going on in the background. First time I'd have to buy a fan in the UK. There's no AC in this little office here, but the fan's going. I hope it doesn't interrupt too much. And hope the electricity supply doesn't pop like we had yesterday. Anyway, serious matters. We have got obviously all eyes on Washington and what Trump is going to do. Is he going to join Israel on a further attack on Tehran, on Iran and their nuclear facilities? The supreme leader in Iran today has obviously said his country won't surrender, won't give up. Trump was called for a complete surrender. Netanyahu has actually been quite quiet over the last few days. The IDF have been obviously speaking on their behalf, on his behalf, I should say, militarily. The missiles between the two continue to be exchanged. Both west and east parts of Tehran have been hit now. Tehran, a city of over 10 million people, it's as big as London. The entire population of Israel is not much more than that, I don't think, or might be a bit less than that. But anyway, very critical situation for the region. Sworn enemies, obviously, these two countries. Iran, for best part of 40 years, has called for the eradication of Israel. Israel similarly wants the eradication of, well, I said as much, but want regime change in Tehran. So let's see what expires. Now, my colleague Arura might be joining us today. I'm not sure, but let's see if he does, because I'm sure he's got some very interesting insights. Anyway, obviously we got the Fed, very unlikely to do any, well, virtually 100% as far as the FOMC, as far as the CMC futures are concerned about any change in policy tonight. And it's, the key thing tonight will be the dot plots, the outlook, and what Powell says, how hawkish he is, how dovish he is, how the market interprets what he says, more importantly, and what he doesn't say. So, analysts, people like you and I, traders that watch what's going on, can think what we like. It doesn't really matter what we think. It's what the Fed are going to decide to do, how their meeting has gone, what's said, what's not said, and we'll see what's going to come of the decision. Now then, is that it is Aurora joining me. Okay, can everybody see Aurora? Aurora, can you hear me?
Yes, hello, how are you doing?
Good afternoon, and I can hear you as well. That's great. Okay, welcome. Hope you're well. How are things?
Everything is fine, and we are waiting for a decision that we know already what's going to be happening.
Yeah, a non-decision, exactly. So I've started with, I've got oil here. We had that spike through $75 and as high as $77.50 on Friday. Big sell-off on Monday, and we bounced back yesterday, and we're down again today. But we're still sort of holding around that key $75 level. But these two big, I don't know if you can see those yellow lines on there. These two yellow lines here at $70 and $67 was a key resistance area earlier in the year here. You can see over here in the spring, March and April. So can we hold this level basically? And now the key red line here, which is the 20-day moving average, it sits at this key $67. So this is a key channel as far as I'm concerned for oil. Remains bid, obviously struggling to hold $75 a barrel, but over the psychological $70 a barrel at the moment. Obviously the uncertainty about what might happen, we'll see. And again, it's, Iran really is running out of options, you could argue. Obviously they've only got so many missiles. They've sent a lot of them already. Will send more. The whole discussion over the Strait of Hormuz hasn't really been on the table. The assumption is that that's not going to get constricted, but that really is a card they could play of the few cards I think they may have. But Trump has just been saying today, he may do something, he may not do something, i.e. join Israel, give them the not only the aeroplanes, but the hardware, the bombs to actually take out the very, very deep nuclear development facility that Israel is so twitchy about that Iran has. And obviously the Americans and most of the West have said, Iran should not have nuclear weapons. Who's for them to say that? But anyway, that's what's happening, and obviously lots of panic in Tehran itself and the wider Iran as well. Lots of people escaping to the north, to the Black Sea, out of Iran, out of Tehran, but also a lot of people staying put. Again, I don't know what's news you've heard, Arura, personally.
Yeah, as an Iranian, it's so painful for me to talk about that, but it's the reality. This is the reality is going on. That what's happening. In the war, no one give you the chocolates. In the war, this the bullet that's coming to you.
Yeah.
So we have to accept the situation. The thing is that I think it's more than as an Iranian, I have to say that more than that, we have to blame the U.S. and Israel for this war. We have to blame the Iranian the leadership, because it's for more than 45 years. In all Fridays, they bring the people together and say down to Israel and down to America, and then they blame. Then they prepare the missiles and others, and they treat Israel to that they will clean this country from the map. So when you do this for 45 years, you shouldn't accept something good, and you shouldn't accept the flower from the second side. You know what I mean?
Absolutely understandable.
Unfortunately, the people, whatever it's who is blaming going to be blamed is different. But yeah, this is a hard days for the people. About the oil, if you remember, a few days ago or last week, it was too much pressure on me, so I don't remember exact dates. The previous time that we were talking together, I told you that the oil price should be around $70 and $75. We shouldn't wait for something more than that. And I bring I mentioned the reasons, because Islamic Republic government right now, they are in very weak condition. If they want to attack to Persian Gulf, they're gonna bring them. They're gonna kill themselves faster. Actually, they are going to be killed, but they're going to kill themselves faster. That's why the pressure is not what they wanted. It's not something that they want. They choose to do. So we don't see that. I don't see any other too many options that they can take this war out of the Iranian borders. So it's going to be limited in the Iranian borders, and Iranian oil by now, which is exporting, is around 1 million barrels a day. I mean, between 1 and 2 million barrels. We know that's the black market. No one knows exactly the number of the bottles that they're exporting. So it's something between 1 and 2 million barrels. But anyway, even if you cut all these barrels from the market, Russia and Saudi Arabia, they are ready there to replace this oil, and they will be more than happy to replace this oil, actually. Both countries, they are in a financial pressure, and they need the money. So we shouldn't be worried about the oil market, to be honest, unless if the Iranian leader they decide to kill themselves and attack to the Persian Gulf, which even if that happens, I don't think that the Western countries, they let that happen. They let that to continue more than 24 hours. So I'm not worried about the oil market, because inflation is something that came down so hardly. No one is going to let any other country to bring this inflation again high. So this price for the oil is fine.
I've just put the gold market up as well after the big fall on Monday. The rally obviously on Friday, the big fall on Monday, and we've really gone sideways, and that's really what markets are waiting for. Obviously some resolution to some of these geopolitical issues, but obviously today in particular, just waiting for what the Fed are going to say with regard to their dot plots in particular, and how Powell performs, the degree of hawkishness or degree of dovishness as far as the market is concerned in his press conference later on as well. So if we just look at, let's bring the other the other markets that we just bring on the euro. It remains obviously the pressure on the dollar remains. There's no change there. This wait and see mode from the Fed is still very much in place. The 20-day moving average here on the euro is at 114.20. We have been down for the last few days, having spiked to 116 and not been able to hold it. But more importantly, we've been sort of holding around the 115 number. It's much more of a psychological round number. Fives and zeros, always very, very key. It was a previous resistance area here back in April when we first had this big rally during April as the dollar weakened and euro spiked on the big fiscal spend that's been promised by Germany. We've been down to test the 50-day moving average. The dollar came back a wee bit, but here since the middle of May to the middle of June here now for over a month, euro dollar's been in an uptrend and just rallying. So take your stop loss up. Again, technically, some positions would have been closed out here as if they've, if their trend following, they've brought their stop loss up to the round about the 115 area. Profits would have been taken here. Last 100 pips taken out, and then that's gone. So where we go from here, again, very much dependent on what both central banks do, and if there's any significant change in outlook, and it doesn't look like that's going to happen. Certainly over the summer, September becomes a key focus, as ever, as with most years. I say this every year. Things will start again in September. That September-October window, and then we got that final quarter of the year. So euro dollar in upshot remains under pressure. The Aussie is over 0.65 here, back up again today. CAD is back under 137.
Dollar index.
Sorry?
Same. For the dollar index, if you have the chart of the dollar
I haven't,
index.
but I'll just run through the majors here, the announcement coming out. Swissy, which has been the best performing, is been into 81, and we're back to 81.57. Yen, 144.76. So struggling with 145. See the big resistance area here for the yen. Let's just obviously it's just ticking around to the top of the hour. So let's have a look. What's coming across my terminals. I've got a Bloomberg screen on up here as well, so that's gone off to adverts at the moment. So obviously not happening. Obviously, labour market is key. Stocks in the US are to the upside at the moment. But let's just drill down into the euro on the 5-minute chart. We've got some movement as the mouse comes up. Trump talks Fed leaves rates unchanged. There's no surprise there. So we see how the immediate reaction is a weaker dollar. Obviously, there's something in the statement there that I don't know if you've seen. Have you done? If Aruri, you've got anything more than I have? I've only got an internet feed here.
I'm trying to check the statement and the dot plus to see what exactly we have in a dot plus, because more than the statement, I want to check this. I mean, in the statement, all that is the next that again the commitment to see the achieve maximum employment, same thing. The support of the goals is the commitment to decide to maintain the target for the Federal Reserve rates. The same thing. The committee will continue to monitor the employment of the country. There's nothing changing in the statement.
I can't see.
There's
universal. I mean, they were all in. Unsurprisingly, they were all in agreement. There was universal voting on the MPC. Appropriate stance on monetary policy. Continue to monitor the implication of income and information economic. It's all very central bank speak. There's nothing in there that immediately looks changed. The word uncertainty is still there. Uncertainty about the economic outlook has diminished, but remains elevated. That was last time as well. Diminished but elevated. They said that last time. Again. So obviously you can see the immediate reaction to the dollar here. Euro went to.
Let's go to the dot plus. I can see some very interesting numbers in the dot plus.
I haven't got any. If you've got them, do you want to share them? Take over the screen.
We can. Sure. Let me share it. That's very interesting changes in the dot plus, because I mean the thing we can say already, they could be up. Here we go. Let me tables.
Yeah. Try to stop sharing, or you might.
No, that's just I'm trying to.
If I stop sharing,
The
you might.
federal okay version. Here is not this one. Yeah, here we go. I was trying to find
There we
the
are. There we are. Yeah.
too
Yeah.
many tables are open on my
Yeah.
okay. So here the change in the GDP, for 2025, they lowered the GDP expectations growth. So from 1.7 that they were expecting to see in the March meeting, now they see the 2025 GDP grow at 1.4%.
Mm-hmm.
Unemployment increased from the 4.4% to 4.5%. So that means that they expect
Yeah.
to see the inflation. Oh, well, look at that. The PC inflation.
Back to
They
3.
increased the inflation expectation from 2.7% to 3%, and core PC price from 2.8. That's the big change from 2.8 to 3.1%.
Yeah.
So they don't see any expectation, which means that they can see still 2 rate cuts by
That's
year
what that's
end.
looking like. Yeah.
Yeah. So, but still, with these numbers, we can say that okay, these numbers they are something that they can support the US dollar index. I don't. I think with this, with the numbers that we can see here, stock market is gonna have a much harder days. Do you remember today's data, which we had today's data for all the data that today we had, and yesterday and today we had from the United States? All of them they were counting on a higher expectations for the rates.
Yeah. If I just, if can I just take the screen back over?
Sure.
I'll show you
Yeah. Sure.
Sorry, screen. There. If I just bring up the Forex factory from today, tomorrow the US market is closed for Juneteenth, the 19th of June. And so normal data, or some data that's normally released on a Thursday, i.e. the unemployment claims, the weekly unemployment claims, were brought forward, and we are back at the 245. You can see this number here, 245,000. More interestingly, more important for me was this upgrade from last week. It was only 2,000, but it was an upgrade again to a key psychological 250,000 number. It's the first time we've been up here for well over 20 odd months. And if we just bring up this chart here, today's number has last week's number has been upgraded to 250,000. So this has actually been upgraded up to this line here. And you can see here we haven't been back at this 250,000 level since the spike we had in October, the 10th of October, because of the hurricanes and the weather. So if we take this particular spike up here where we went all the way to 260, the 250 area was last hit in the summer of last year, July, and the couple of weeks in July and June last year as well. So this is a significant rise. The other key thing about the last 3 weeks is we've got 3 consistent 240 readings plus. Every other time we got to this 240,000 level, we've come back down, showing the resilience and the strength of the US jobs market. There is clearly now these 3 consecutive weeks of data higher than the 250. There's now clearly more money. Sorry, not money, but more clear data that perhaps the jobs market is starting to not only starting to soften, but perhaps start to crack as well. Obviously, it's started to move and it's moving up. So the level is up. It's still relatively okay even at 250,000. May not look this on this particular chart, but historically, if we go back, years, it's only taking us back to the
250,000 is historically normal level. It's not something that we can. There is something worse happening.
Yeah, exactly. But it's just how the impact it has on the Fed's thinking, and the Fed focus on these 2 mandates about jobs, unemployment, and the inflation number. The inflation number came down, looked like we were on to 2%, coming under 2%. There isn't any inflation, and then there's some signs of this showing a bit of spikiness. A bit like you can see here with the UK also earlier this morning, came in a bit higher than expected, at 3.4% from 3.3% expected, but down from the 3.5% last month. That week retail sales numbers yesterday, particularly weak, the headline, but the actual detail in the data wasn't as bad as that headline number gives us. So I mean, it's not all of this data sort of in its sort of entirety still is not going to change what the Fed is going to do. If they are going to move with, well, again, this is just my opinion on reading things. If they are going to move by 50 basis points this year, it's certainly going to be, not until September, November time, or even, even later than that, October. And actually, I don't think the meeting in October, but the September and the December meeting potentially, or not at all. I mean, that's very much on the cards as well. I think them not actually having to do anything. But as I say, it'll be interesting to see what Powell has to say in 30 minutes. Those dot plots have been tweaked somewhat. I would argue on that. I think stocks are probably a bit firmer on the news. Let's just go back to the actual reaction to the market. So here on the 5-minute chart, the euro dollar's weakened. We're now back over the key 115 area. Cable is over 134.50, and again that's up similarly. Aussie holding at 65.25, and the CAD 136.60 now to the downside. So the dollar's under pressure in this first 10 minutes after the announcement. Let's have a quick look at yields. Are probably lower as well. Yeah, yields are down, 2 years down a tad. Indexes. If I just run through the stock indexes, and then if you bring up the dollar index, which I haven't got here, unfortunately. So the Dow, Dow's been fairly flat today, hasn't it? So yeah, fairly flat today. And again, from a 5-minute chart point of view, sort of we were up and then we're back down. So it's sort of drifting low. The more rate sensitive tech sector, the Nasdaq 100 again rallied and then is back down again. Where are we? 21,765. And the most important of all, the S&P 500 is back under 6,000. It briefly touched 6,015. It wasn't quite a high for the day, interestingly enough. That was at 3 o'clock my time when we went to 6,017. But we're now back under the key 6,000 handle on the dollar index. Arur, if you want to share the dollar index with everybody.
Yeah, sure. Yeah, the dollar index. I mean, we should watch what's happening in the market first. Like for first 5-10 minutes, or even the first 30 minutes, the market always trying to test the market participant and test the conditions and the positions that we have right now here. But generally, when you're looking at the data, I believe that always what always I say that you see my chart, right?
Yeah.
What always I say that economy is never going to lie us. What we can see in economic expectations and what we can see in the projections that we had, when you expect to see the inflation higher at 3.1% for the core PC price index, and the PC price index at 3%, which means that and you increase this inflation while you're lowering your unemployment rate. That means the market's expecting to see the prices for a little bit higher for longer. And which means that the borrowing cost should be increased. When the borrowing cost increase, it means that you have a less liquidity in the market, less cash in the market. And when you have a less cash in the market and more demand for that, it increases the value. That's the simple what is happening between the inflation expectations and what when the markets, when you go to the bank and you see that you should take this money for, the money that you want to take from the bank is going to be more expensive for you. So you take less money from the bank, you take less credit from the banks. So less cash in the bank. That's what's happening, very simple, in a simple way. So the dollar will be less in the market, and that increases the demand. So that increases the demand. So the economy telling us that whatever happened in the chart technically, this is expectation. This expectation can take the US dollar index higher. In a previous conversation, when the price was about under 98, I mentioned that our expectation for the dollar index is between 98 and 100. Now I can tell that the next target for the dollar index will be between 99. This is where I expect to see the dollar index for next. I mean, this is the 1 hour chart. If you bring it to 4 hour chart, it can be much more guys. I mean, what I say that if you want to trade in the market, if you want to invest in the market, always try to understand the dollar index movement. understanding the dollar index movement can always handle and help you to realize where your positions should go, because the dollar is one of the main market base. So with these expectations that we have from the economy, I can say that this area again for the dollar index is our expected, my expected area for the dollar index, 99 and 100, 101. This area is what we are expected to see, which means that the higher, more demand. So the dollar index is still in a demand with these expectations and can move faster. So when the dollar is higher, you can count exactly at the same condition for the currencies against that, especially for the for the GBP that tomorrow we're going to have less than 24 hours. We're gonna see the Bank of England's meeting as well. So the dollar index, I'm still positive about that, but it doesn't mean that you could see that much higher around 101 or two. But something between 99 and 101 is my expectations by mid of July. I mean, for next 30 days.
Okay. Okay.
Yeah.
We'll see. We'll see if that that key 116 for the euro is actually the top for the year, but still looks big to me, the euro. And also remember, guys, the dollar index is key. It's a leading, well, not leading index, but it is what it is with regard to the strength or weakness of the dollar. But it is only made up of 6 crosses. And
Yeah.
the impact of the euro is by far the biggest impact on that. 56% of the weighting of the dollar index is taken by the euro. So the cooling in the last few days for the euro, as it's got to 116 and then come back to 115, will have sort of lifted the dollar index. But that euro, the dollar for me still remains weak, and the policies. If we take out the geopolitics of things at the moment, which is what everybody's focused on at the moment, the policies, the tariff focus from the Trump administration means that weakness in the dollar could quite easily continue. And obviously that keeps the hands tied of from the Fed. Inflation does start to show some spiking, and it's looking like it's not doing that. But it's interesting that those expectations from the PCE from the Fed was actually lifted in this report, which is of particular interest. That
let me add you something. Yeah, let me add you something about the stock market. That's the chart that you can see here is the S&P 500 chart. We are trading actually.
What time frame is that?
SH4, 4 hours time frame. What you can see here is the 6,000 area. It's a K level for the S&P 500. It's exactly the 20 moving average. Which is very fine. I mean, very likely, very nice moving average period for the H4 time frame, the 20 period moving average. But the thing is that if you look at that fundamentally and compare the fund, I mean, not joining, I mean, bringing together the fundamental data and the technical chart that we have here, we can say that higher rates, which it means a little bit hard days for stock markets, because the company they're gonna list more expensive money to borrow from the bank, so we can see the less investment, and the less investment can increase the cost of the investment in the companies and lower their expected. I mean, the expected profits. So when you have a less profits in a company, you cannot count too much on their stocks. That's the general what's going on right now with these numbers. So with the tariffs that we are expecting to see, the U.S. government right now these days very busy with geopolitical tensions, and they really forget about that their trade talks. So from the next week, we're gonna have the tariffs to go roll out. I mean that's not a joke. That's very that will impact the market hardly. From next week, we're gonna see the tariffs. They should be rolled out as the 90 days will end next week.
Yeah, that's a good point. Yeah. That 90 days clock ticking. Yeah.
With these numbers with these numbers and compare. I mean, to bring this fundamental data to the chart, you can say that okay, what I see here that the 6,000 is the challenging level for the S&P 500. This H4 chart, but if you go back to the one, let me make it the one daily chart. and even the weekly chart. So let me make a daily chart is fine for now. If you look at the daily chart, you can see that the 6,000 always it was very challenging level for the S&P 500. It tried several times to hold itself above 6,000, but it wasn't successful. That's what I say here. What I see here, that fundamentally, again, this level will challenge the market, and with what the expectations with the higher rates, with the expectation of the tariffs, and the geopolitical tensions that going on. Don't forget that the geopolitical tensions, yeah, I say that it's not something too much serious that can affect the oil market, but still it's a serious area. I mean, the Middle East. We are talking about the geopolitical tensions in the Middle East, and always there's a risk unless you solve it totally. And solving it totally is not something that you can make it in 1 or 2 days. So the pressure on the stock markets, continues. I don't see the levels higher than this. Depend on the economic data, depend on the geopolitical tensions, and I believe that if you want to see the higher numbers and the gain for the S&P 500, it can happen not before than the fourth quarter. So the third quarter is the hardest days that we will see here, especially in the September. We're going to see the really hard days for the third quarter, and I hope that in fourth quarter we can recover some of this loss, but third quarter I'm not positive about the next days.
No, well, the third quarter should be when the impact of the tariffs is visible. From what companies have said as far as the second quarter is concerned, obviously we're still 2 weeks before the end of that, but the economic data has held up, particularly. Obviously, the sentiment data has fallen off a cliff during this second quarter. But so second quarter earnings, excuse me, could actually be okay as well. So as you said, the third quarter, as ever with most years, is key, and then the rally in the fourth quarter potentially for stock markets. But anyway, just before we wrap up, I'm just going to go through some open trades we had from last night and yesterday. Some strange crosses, but when my system triggers, it triggers, and I take them. So we were short this is the Kiwi yen. We were short this. We took this earlier on in the day. I was out last night, so I actually took looks like it was positive. Sorry, it was long. What am I talking about? We were long this here at 4 o'clock, I think 5 o'clock my time when I took this. We're out of the money all day. It's an end of day trade. We got close to stop loss this morning. And we've gone sideways ever since. So I might end up closing this before it gets to stop loss. But anyway, that's still open and it's out with the money. That's a short on the Kiwi yen. The other short we had was another yen cross. That was Kiwi yen. It was the Aussie Kiwi, and that's also out of the money. Last time I looked at it, Aussie, where are we? Aussie yen, I should say. I'm talking about Kiwi. Aussie yen was the other short we took earlier on in the day yesterday. Again, another one that came within a smidge of its stop loss, rallied, didn't get back to entry, back to the stop loss area. It's back up again now. So again, another one that's out of the money currently, but it's still valid. This is the hourly chart. These trades were taken on an end of day basis, so they're still open. The pound Kiwi, which is on a different strategy, which I'd normally review early in the morning, and I closed this for a gain of 16 pips. Again, from an entry back here last night. This was the entry last night. Sorry, this is sorry, this is last. Where's the entry? No, sorry, what am I talking about? It's here. Entry's here, you fool. And we closed this out this morning as we were. I think it was about 7 o'clock. We were in the money. That's right about here, I think. But it had gone back against us. Anyway, it's gone to target now, having gone back to entry whilst I've been during the European session. But we closed this early. But anyway, that has actually hit target. And that actually looks like that might be triggering on the more conservative system tonight. Obviously, there's still a few hours to go before that closes. So that might be a short tonight again. But that's hit the target we set. But we were out for 16 pips. We would have got 40 pips if we'd left that to run. So 2 are out of the money. 1's in the money. So far this week, we're actually down. We're down about 127 pips. We had 3 losers on Monday. We were flat Tuesday, and we're down 127 points at the moment. Tonight, my system, where has it gone? It's down here on a different screen. I can't share it with you, unfortunately. I'm looking to take a short on the pound Aussie on the main system, and a pound Kiwi is also short, so that's that one we've closed. Looks like so the it's triggering again tonight. The pound Kiwi around about that 222.45 area where we are now, and we're looking to get to 221.96 under 22 here. Down here somewhere for the pound. So that might be another trade again tonight. I haven't traded it last night and closed it earlier this morning. They're the two on the main system at the moment. And then on the more aggressive system at the moment, we've got Aussie Kiwi long. So it's obviously the Kiwi is the one that's been triggered on my system here. I'm not sure I'll take that because the stop loss looks a bit too close at the moment. Kiwi, Aussie Kiwi, and then Aussie dollar has been flipping around for a couple of days as well. That's looking like that may be long as well, but again the stop loss looks a bit iffy on that, and that probably won't be taken. We've gone sideways, but it's still bullish to 65.50 the Aussie dollar. But as I say, I'll update the Discord group as ever with what's going on there. So keep watching that for later on tonight. I'll share that with everybody. So if there's no more questions, guys, we'll wrap this up and we'll just go back to the summary. The Fed has not moved interest rates as the market had predicted, or was that anticipated, not predicted, was anticipated. We just go back to the euro here. And you can see we're still here, the euro is just bouncing around that 115. It's still, this is the hourly chart. We look at the, just take this to the 15-minute time frame since we've since the announcement came out. So the first 15 minutes since the announcement half an hour ago was positive. We're down a wee bit now, but we were shy of the day high in the immediate reaction. See what Powell has to say in the next 5 minutes or so at his press conference. I'm going to go off and watch that. I won't bore you with talking that through here live. But finally, tomorrow is the bank. I think. Well, we got the Swiss National Bank. We got key employment data out of Australia overnight as well. As I said earlier, the US is closed here. It's Juneteenth day, 19th of June. A speech by Lagarde after the SNB. Then we've got the head of the central bank in Germany. Nagel has got a speech. Look, they're all out of off the lead now, and then we've got the MPC. Always interesting to see what their vote splits. Very divisive, not divisive, but very somewhat divided. Some heated, interesting.
5-4.
Bank of England. 5-4. You think? Okay, we'll see. We'll see. No change is expected, but they could surprise tomorrow. Actually, they could surprise. So yeah, watch them. Tomorrow we'll be live for that. Rory, joining me tomorrow for that. 12
yeah, I will try. Yeah. I will be with you.
11 o'clock Universal Standard Time. So join us tomorrow, everyone. And then that bit of spiky inflation we've seen in Japan as well. We got that later on tomorrow as well. So key day tomorrow, even though the American market is closed. So we'll have a quiet afternoon session tomorrow, on the 19th. And then on Friday, we got quite a heap of data, a lot of it less significant, but we'll be live for the Philly Fed Manufacturing Index at 12:30 Universal Standard Time, GMT, for that as well. I think Aruri joined me on that as well on Friday as well. So we'll see you all for that. If you haven't got an account with theproptrade.com, the question is obviously why not? Because it's a great way to get into trading, prop trade, and we at the Prop Trade, we're grown-ups. We've been around the block a long time. We do know what we're talking about. Our challenges are very straightforward. Our rules are very, very clear. And what always appealed to me about prop trading was, you have to be a disciplined, consistent trader to get to the stage where you can actually start making money. Too many people come into this business expect to make money straight away from a $50 deposit in a CFD account or something, or trying to trade futures with $100. Prop trading gives you the ability to trade simulated accounts, yes, but you're not using live money, but you are using live feeds, real feeds from real liquidity providers. Prove to us and to yourself that you can do this. So you keep your daily loss to 5%, your maximum loss of 10%. Then you get your funded account. So once you've got to your funded account stage, you get your challenge deposit back. And then, you know, any future profits you make, you're making a minimum of 80% of that yourself. You get to keep real dollars from a very small investment. You know, if $85 gets you a $10,000 account, you know, if you want a meaty account, our most popular, understandably, is the $25,000 account. That's $175. If you're new to the prop trade, which I'm sure a lot of you are, if you put in new 25 here in the when you're registering in the coupon code, and that will give you a 25% discount, and that comes in at just over $130 for a whopping $25,000 worth of equity to play with. You know, trading, and allows you to trade forex and gold and oil and these indexes we talk about all the time, 24 hours a day. So and obviously crypto as well. So keep in touch, guys. The best of luck, everybody. We'll see you tomorrow for the Bank of England. Aurora, thank you very much for your time again.
You're welcome. Is there any place that people they can write a question? Because they never really can see the question.
They could stick it, if they're watching us directly on the Restream link, they can stick it in there. Okay. If not, we don't see. I don't see them on Twitter or on YouTube at the moment. But yeah, if they have obviously got questions, the best place, guys, to join us and interact with us is on our Discord group. Discord is very, you know, obviously initially for gamers, but we are very active on here. We'll you know, the general chat level here for the prop trade. We are answering things instantly. So all my trades, the trades I talk about every night, are here under the trading strategies tab here. So there's this morning's update. The pound Kiwi closed for 6+16, and there's the trades from last night, and there's the story from Monday. They're both interesting. The CAD yen and pound yen, another one of those targets. Both of them came within a pip or two of target before they reversed to stop loss, and that for me, but I'd moved the stop loss up, so it wasn't as bad. But for me, that's having nearly got to profit and got stopped out. That's okay. But the worst one is when you've actually gone over target and it's not closed out or something, or you've moved your stop loss. You know, you were in profit and then that gets eaten away. That's what you want to avoid. But anyway, I say we're out of the money so far for the week, but we still got tomorrow and Friday to try and make it a winning week. We haven't had a losing week I think we've only had one since the beginning of the year. So we're probably due one, to be honest. But anyway, take care, everyone. We'll see you all again tomorrow. Aurora, again, thank you for your time. And
have a good
great, safe evening. Take care, everyone. Bye-bye.
Yeah, bye.